Good morning, traders. My name is Charts247. I train traders how to trade in harmony with the market. It is my great joy and privilege to join this community of fantastic group of traders who are contributing on a regular basis at the Forex Station website. I am so delighted that I've managed to share Chart247 SmartTrader. It hasn't been an easy journey for me, particularly when it comes to trading, because my aim for a very long time is to learn trading and start to teach people, and that brings in another challenges. And over many years, we've had the highs and the lows, as I'm sure many of you guys here, you've had the same. But what we've realized over several years is things turned, that you get to a point in your trading journey that things will just start to turn, and you start to actually see the clarity, the picture. What I want to say is those picture came by simplifying things, not by complicating things. And what I present to you guys is simplicity in trading. We go back to the basics. That is called the price behavior. My contribution to this community is this Chart247 Smart Trader. I'm going to be, as I promised in my post, I'm doing these videos so that I'm not assuming anything. I'm aware that most of you guys have been trading for a very long time. Some of you, you are master at what you do. But if you are using this system, or you want to give the system a try, I'm not going to assume anything. I'm going to do what I promised I'm going to do. That is to explain some things, or I'll call them the foundational truth about the concept that we are sharing here. So today I'll be talking about price. So let's talk about price. We ask many people what is price. I'm sure if you ask 100 people what is price, you're going to get different different answer. But simply what we trade on a day-to-day basis is price. So I termed it as price is the perception of traders. When we are talking about traders here, we are not talking about you and me. We are not talking about those that have a couple of $100,000 in their account. What we are talking about here is the traders that have the financial and the psychological ability to move the market. The banks, the hedge funds, those people that actually, when they say buy, the price will change in that direction. When they say sell, the price will change in that direction. Those are the ones we are talking about here, because they are the ones that we follow in order to be successful. Okay, so when price of a financial instrument is moving up and is at a high, I'm going to show us that what a high means. We've already represented that in the system. This means the market is bullish. That means price has been rising for a while. We have a series of higher highs and higher lows, and there is more buying interest than selling interest. This high represents something, and this is the reason price has traded to that high. After reaching this high, some of these traders, the people that push that price to that point, buyers, will say to themselves, the price is too high and it does not represent a good value to them. So what will happen is this: they will start to take profit and close their positions, not to change the trend, but they are looking for discount. Is you think about this as if you're going to the market, and you went to the first store and you saw the price of what you wanted to buy, and you can see this price is too high, and you can ask for discount. Say, okay, can you sell me, instead of asking for $200, can you accept $150? Then you start to bargain. This is exactly what we are talking about here, but in a more subtle differences, in a more subtle way, that is more, we don't actually need to understand that. All we need to understand is when price rise, there will be a discount. There will be time when the price will come down a little bit without changing the trend. So this is important. That is the perception, that movement up and a pullback down is the perception of the traders. So the next thing we're going to talk about, okay, is the sellers. So on the other hand, the sellers that seen that price at that high, they will see that price as being cheap, and that high represented a good value to the sellers. Then the sellers will begin to sell. As the sellers are selling, the buyers are coming out. Sellers are selling, buyers are coming out. New sellers are seeing this price coming down. They are joining the party, and the price start to come down. Price will then begin to trade lower as more sellers come into that market now, because they are now outweighing, the sellers are outweighing the buyers, and the price will start to trend down. This exchange of transaction is what determines the price of any financial instrument at any given time. If we complicate it more than that, you are creating problem for yourself. Okay, we have to accept price as simple as what I've just explained. Okay, let's just look at the chart. Okay, I've disabled so many of the features of the system here. Actually, let's use this. Okay, let's use the Canadian dollar Japanese yen. Okay, this is the 15-minute chart. We can see the rally highs, which represent the high that I was talking about, and we can see pullback low, which represented the lows that I'm talking about. Let's use a section here. Okay, price broke the low, it became too low for the sellers, and the price traded higher. At this point, from this point here, from this 1x to this higher high, we do not know if the trend is going to change. All we knew is the price is discounting. So we are looking for an opportunity, because we have a pullback low. We are looking for an opportunity to sell. Okay, once we have our sell signal, like here, this one came up. We have both the primary and the secondary sell signal here, and we start to sell it. Okay, and price changed direction. You cannot predict this. All you have to do in this case, you probably lose the money or take the trade upon reversal of the pullback low. Okay, so this will be a nice exit to come out, because if this pullback low is broken once, twice, you are expecting it to continue. If it doesn't continue, that is another rule that I'm going to be sharing. Those are the simple strategies that we'll be sharing during the strategy phase of the videos that I'm going to be doing. Then the price changed direction. Instead of you seeing lower lows, you are now seeing higher highs. And then price got to a point where we can call the high. This now become a new state of the market. Remember, you have no input in this. The people that are moving the price have decided that this price is no longer going down. There's no need for you to fight with the market. There's no need for you to fight when you have no capacity to push the price down. So you have to have something that tells you this price is no longer going down. And that is what we have incorporated into the system. Then the price traded all to the high. Then we have a high, rally high. Now, what we are really looking for, what we said in the tutorial, when price get to a high, okay, let's look at it again. When price get to the high, this price, some of the buyers will say to themselves, the price is too high and it does not represent good value to them. And when you consider this one, this is a fresh high. This price was down before. Now it made a high. Definitely, these are the type of price that you should expect a strong pullback. And what we saw is a strong discount in price without changing the trend. The price has been discounted strongly without changing the trend. So what we saw now is the price became now a very good discounted price. This is where people can use Fibonacci. I love to use Fibonacci. Hopefully in the future, I'm going to show you guys how I use it. Now we have a low to the rally high. I can place my Fibonacci as a discounting tool. I'm looking for an area where I have to start to think if these buyers are strong enough or if they are intentional enough. I should see their conviction. Okay, and that is what moves the market. Conviction of buyers and sellers is what moves the market. If the buyers are convinced that this price has been discounted enough, you start to see a directional move. They will pull back and break the first break or the first attempt to move in that direction, and then failing to go below that pullback level is an indication, and you start to see price continue in that direction. Then you start to see series of rally highs, series of higher highs. We've numbered this so that we have wave counts that we can actually start to monitor how the waves are how the waves are connecting the trend, how the waves are serving as our exit point, and we start to label them. We start to see levels where the risks are becoming higher. By just looking at the numbers, we are saying to ourselves 3x, 4x. Okay, I need to start become cautious now. If I'm still in this trade and I've entered at 2x, I'm entering at 3x, I'm entering at 4x, I'm starting to reduce my exposure and trailing my stop loss below this price point. Okay, now this trend will get to a point, okay, when the price will become too high and the sellers will sell it, but the trend will not change easily. And this is one of the most important thing I'm going to actually be sharing here. When you have an established trend, as a trader, you need to respect it. What I mean by respect is you have to trade in line with that trend. Because if that trend is present, let's say this is a 15-minute chart. If that trend is present on the daily chart, if it is present on the 4-hour chart, and if it is present on the current time frame that you are looking at, trust me, that trend will not change easily. I know we are talking about price now because price will turn to a trend and the trend will be counted in waves. That is the way the market works. Okay? Price move to trend, trend move to waves, and these waves can be counted. That is why we have what we call the wave structure. And in the wave of success methodology that I'm teaching, that is the foundation of this Chart247 Smart Trader. This is the core of what we do here. A pullback in an uptrend is not a trend change. Some certain conditions have to be met before we can classify something as a trend change. So, from what I've been sharing this morning, price is the perception of traders. If they feel the price should be going up, they will show you that the price is going up after every pullback. And this pullback, this pullback, this pullback, this pullback, this pullback, they are there to serve our purpose. Because all I have to do is to identify a trending direction and identify what constitutes a trend changing pattern, then differentiate between a trend changing pattern and a normal pullback. If I can identify a trend and I know what a normal pullback looks like, then I have a system. Then after every pullback, I can take trade in the direction of the trend. So, in to recap what we have said, price is the perception of traders. What we trade every day is determined by some group of traders that decided to buy because they know the price is going to go up, that decided to sell because they know the price is going to come down. But there's a fundamental pattern that cannot be broken, and that is trend. Okay, when a trend is established, that trend will continue in that direction until we saw a pattern which I'm going to be sharing later in the upcoming videos. We call this a trend changing pattern. If we do not see a trend changing pattern, we are not going to assume the trend is changing. Therefore, our trading has to be very simple. Okay, it has to be simple, and you have to trade in the direction of the trend. I have So this is the first lesson. Okay, we need to understand the trading is simple, but it's not easy. Price will tend to give us the clue that we need. The problem we tend to have as traders is we try to guess what is happening in the market. If you can remove guessing and follow simple rule, then you will start to become consistent. Then you start to become consistent. Then you start to become consistent. Then the result of your consistency will be profits, profits, and profits. So I have gone through the motion of up and down. I've gone through the motion of fancy indicators. Trust me, I love indicators, but I got to a point where I said, okay, this I have to trade for myself. Okay, I don't need to focus on something that is telling me to do something, but I have the understanding. So, who is the master? You have to be the master of your trading. You have to learn trading in the way that you can anticipate what is going to happen. And when it happens, you have the confidence to execute what you have expected to happen. That, my friends, is the clue to successful trading. So, this is the end of the first video. I'm going to be sharing more. Okay, as I said, I'm going to be posting this video here, okay, to guide anyone who is actually going to start to give this smart trader a try. Okay, if you like what you see, give us a thumbs up. My name is Shegun Chat 247. God bless, and I hope to see you guys in the next video.